Hello, everybody, and welcome. I hope you're having a great day. So, today we're going to be addressing this article. SoFi stock falls after announcing 1.5 billion common stock offering. I can't wait to give you my opinions and perspective on this. So, here we have the 1 month chart. Basically, they reported earnings on this day. We can see it spiked up toward the end of the day, went back down. We all know what happened last Friday, and we're kind of trading back up today. So let's get into it. Before we get too far, though, make sure you pause and read this if you need to. Disclaimer, I am not a financial advisor. This is not financial advice. I think we're just going to start with what actually happened in the earnings report. I have everything here. So just to kind of put some perspective to the results. So as you can see, they reported a net revenue of 854.9 million. This was up from quarter over quarter from 771 million and year over year up from 597 million. Trailing 12-month revenue of 3,057 million. For net income, they reported 97.3 million. This is up quarter over quarter from 71.1 and up year over year from 17.4 million. Earnings per share, they reported 0.08 cents. This is up quarter over quarter from 6 cents and up year over year, like, what is that, 1,000% for a 1/800th of a cent? This leaves a trailing 12-month EPS of 48 cents and profit margin. I thought this was just interesting to show how they are growing margin over time. They reported a 12% profit margin for quarter two, up quarter over quarter from 9.2% and up year over year from 1.4%. Given those results, I just wanted to remind everybody of the guidance that given by management. Anthony Noto raised their full year 2025 guidance. They want to reach over 3 million new members. This would be 30% growth. They're targeting a 3.375 billion adjusted net revenue, 960 million adjusted EBITDA, and 370 million adjusted net income. Again, you can see all of the comparisons and where we're currently at up here. Medium-term goals include exceeding a 25% CAGR from 2023 to 2026 and achieving EPS of 55 cents to between 55 to 80 cents in 2026. So as we just discussed, SoFi had tremendous financial performance for quarter two. They also had outstanding member growth. They added 850,000 new members, increasing total membership to 11.7 million. This is SoFi's 17th consecutive quarter of GAAP profitability. I don't know how long we're going to keep counting this. Just to kind of really drive it home, they had adjusted net revenue, 44% year over year increase, and their fee-based revenue hit a record of 378 million. This is up 72%. They also increased their product count. They grew at 34% to over 17 million, allowing them to cross-sell better to their existing members, on top of the tremendous member growth. Next up, I want to go over some business segment updates. Lending, adjusted net revenue of 447 million, up 32%. This was mainly led by strong loan originations, mostly from HELOCs or home equity line of credit. They had 6.3 billion in originations. Loan platform business originations increased 57% quarter over quarter to 2.4 billion. They're diversifying into near prime loans to expand the addressable market. Loan platform business is running at a pace over 9.5 billion in originations annually. This generates over $500 million in fee-based revenue for SoFi. Financial services. The financial services and technology platform segments combined generated 472 million in revenue. This is up 74% year over year, and it now represents 55% of the total revenue. Again, highlight this just means that Anthony Noto is delivering on his promises. We've now officially reached a previously stated goal, which is a reason to believe in management and trust their decisions. They obviously are able to follow through. Tech platform revenue was up 110 million. This is a 15% year-over-year increase. And what's really exciting is we're expanding the client base outside of just finance. So now that we have all of the context, let's go back to our original question. Should we be concerned about the 1.5 billion dilution? So first, let's go over the exact details of the offering. The offering is for 71,942,450 shares of common stock with a 30-day option to buy an additional or up to an additional 10,791,367. This is going to be priced at $20.85 a share. So if fully exercised, the total shares could increase a total of 82.73 million. This equates to an approximate dilution of 6.54% up to a max of 7.52%. So one way we can view how this affects us as shareholders is one, by the percent of the company owned. I used my share account just as an example. I left the formula I used if you would like to do the calculation for yourself. But as you can see, before the dilution, I owned about 0.2 billionth of a percent of the SoFi shares. Right? And then after the dilution, this is the minimum dilution, just to be clear, I will own 0. I will own 0.19 billionth of a percent of the company. My total ownership decreased by 1/10 billionth of a percent. That seems just silly. Maybe the more relevant way to look at it is how it affects the earnings per share. The new shares would change the trailing 12 months earning per share from 48 cents to 45 cents at the minimum dilution and 44.6 cents at the maximum dilution. This was a fun exercise, but the point that I'm trying to drive home here is there are very little impacts. Not only that, but when we go back to the guidance given, it would be absolutely foolish to believe that Anthony Noto did not know that they would be going through with this dilution prior to raising the full year guidance. So we're planning on reaching these numbers after the dilution has taken place, which kind of is just more impressive, honestly, especially given how Anthony likes to sandbag things, and we end up usually beating the guidance. I think it's important to remember the purpose of the offering is to allow management to raise capital to invest back into the business. I have a lot of faith in management, and in the earnings call, Anthony Noto literally said the biggest challenge moving forward that we have is deciding what not to do. This capital will allow them to take on maybe one or two more projects. I'm fully confident that management is going to invest this capital in a way that drives long-term value for me as a shareholder, and long story short, this does not bother me even a little bit. Alright, well, I hope you learned something or enjoyed the video. If you would like to provide any feedback, it would be greatly appreciated. real quick before we go, I would like to mention that I have slides like these for all of my holdings, and I plan on doing them for all of the companies on my watch list as well. If you would like access to these, go ahead and check the link down below. My Patreon will give you full access to all of my slides. Basically goes over all of my reasons for investing in the company, some facts, and again, just my opinion, plan, how I perceive the company is developing. If you could do me a huge favor, hit the like and subscribe button. I want to thank you for your time, and I'll catch you in the next one.